Okay guys, hello everybody, welcome in today's video. Today we have a very special guest, which is Kierin Mulholland. It's a good friend of mine and he has his own YouTube channel called Kierin Mulholland, where he's making videos about, mostly about decentralized finance, but crypto in general as well. And today we are going to have a conversation about decentralized finance. I have been promising you guys this conversation already for some time. So right now it finally comes to the point. So yeah, Kierin, awesome to have you right here on the channel. Great.
Thanks a lot for having me on the channel, Yearn. It's really an honor. You've been growing phenomenally, and I remember like when we started talking, we were both like at around 500 subscribers. So now it's crazy how fast we're like growing at the same pace as the cryptocurrency market. So hopefully we're gonna have 100K soon.
Yeah.
I create DeFi videos, helping people like do a lot more with their money. And that's what we're going to be talking about today, how to do a lot more with your money, earning some passive income. I mean, who doesn't like having money when they sleep?
Exactly. And guys, two fun facts actually about Kierin. Right now, he still has a job at Ernst & Young, but he is going to quit the job in 2 weeks, which is going to be very exciting for him, of course. And he's going to be full-time on his YouTube channel. So guys, for everyone who's not following Kierin Mulholland yet, make sure to follow him. I will drop a link down below in the description. So yeah, really make sure to follow him as well. And another fun fact is that Kierin is planning to visit me in Bali, so we didn't have the tickets booked yet, but we are making a plan for Kierin to come here, which is going to be a lot of fun, and we can make some videos together right here as well. But yeah, right now let's dive into the conversation of today, and we are going to start with the bull market we are in right now, and a little bit the main conversation is going to be staking, right? And which possibilities are there with staking, which kind of exit strategy we can use, because right now most of our subscribers, I think they were here already before the retail phase in the bull market has been starting. So we're here already since 2018 to 19, maybe to 20, depending on the time, of course, whenever you entered the market. But I think most people right now, they are in profit. If you are not really in profit, then something actually went quite wrong. But you are seeing your portfolio increasing day by day in a US dollar valuation, and sooner or later you want to secure your portfolio, and you want to have an exit strategy as well, right? You don't want to, of course, you want to have a part of your portfolio you might want to have forever in crypto, because you want to be part of this monetary revolution, right? But another part of that portfolio you might want to secure that in, or diversify in different parts. So you might want to go into real estate, you might want to go into staking. And I think staking, I've been reading a little bit about it, and I know it from Kierin's channel as well. Lately, I think it's quite lucrative. It's quite a good option next to going into real estate, for example, to go into staking cryptocurrency. And my first question for you, Kierin, is like, what is your take on this? What is your strategy? How do you approach this this upcoming market with staking cryptos and staking stablecoins?
So like the first thing, me personally, I don't try and time the market. Like there are fantastic traders. I'm more of a long-term investor, so I don't really try to time the market. On the short term, I try and ride the long cycle. So my strategy for taking some profits in the market is just like dollar cost averaging out. For me, that's the easiest way. I set some rates, some targets where I actually sell a small portion of my portfolio. I made a video about that. And that's how I'm going to be dollar cost averaging out. Now, what I think is quite interesting is I do believe like the bull run will probably continue for a bit. I don't think like the euphoria stage like we experienced at the end of 2017 has yet happened. And I'm pretty sure that the prices could go even like even higher than now. And if you haven't made money until now, I mean, seriously, I don't know what you've been doing. I mean, even Dogecoin did something like 30x since the beginning of the year. So you could really literally pick more or less any kind of coin and you would be already in the profit since the beginning of the year. Now, talking about my exit strategy, I'm trying to prove that living the decentralized lifestyle is something that is possible. Now, Jeroen is one of the best examples for that. He started on his journey back in, I think, October or November, going like to Bali and actually living this decentralized lifestyle, doing trades, like earning passive income, but also earning money through the YouTube channel. And I think further step to this decentralized lifestyle is actually making your money work for you. And in the traditional financial system, you cannot do that. You have abysmal interest rates. And the crazy thing is like in Switzerland already now, with more than 100,000 euro, that's about 110,000 US dollars. If you have that in your bank account, you actually have to pay money. I mean, how stupid is that? So I'm all for everything DeFi, and the DeFi can give you a lot more tools at your disposition to do stuff with financial services. And one of the best ones is staking, or basically lending some kind of cryptocurrency and earning an interest rate for that. And the best way is by actually lending stable coins on lending platforms. So I think I'll share my screen with you, and I'll share with you one of the best resources that I know. So let me share with you one of the best resources that you can start with if you have no clue about staking or lending. Before we start, a quick introduction to what that actually means. Lending, what does that actually mean? And the gist of it is actually you put money, cryptocurrencies, onto a platform and allow other people to borrow that liquidity. And the people that borrow that liquidity are paying a higher interest rate in order to borrow it. And that's why you're actually earning such a high interest rate, because if you compare this to interest rates that you would earn at banks, this is vastly higher. Now, the ones that are really, really interesting for me, and probably anyone that's interested in lending, is mostly stablecoins. There are ways to earn interest with staking and lending with others, such as Aave and BTC and so on, but we won't be covering that in this video. We'll mainly be looking at stablecoins. So when you actually exit out of the market, you sell a few cryptocurrencies for one stablecoin and another. This is the next step that you can do. You can actually go onto this DeFiRate.com, and then you can look at DAI and USDC. DAI is a form of stablecoin that is backed by Aave, Wrap, BTC, and a few other cryptocurrencies. It's pegged to $1, so it tries to follow the $1 mark. USDC is actually United States Circle from Coinbase, which is a stable coin that is backed by US dollars from the Coinbase company, which is actually going live today. Now here, the first platform that I think is pretty cool, this one is already quite long standing, is Compound Finance. With 3.72%, 6.26% on DAI and USDC. Now you have to realize that these interest rates are variable. That means they can go up and they can go down. They go up and down based on the amount of liquidity that is available. So the more people that actually borrow these stable coins, the higher that the interest rate is going to be.
It's
but
like
if too many people,
rate.
Yeah, exactly. So similar to the funding rate. So the more people that are providing liquidity and not a lot of people are borrowing, then this interest rate goes down. Now, Aave is also a really, really popular one in the space. It's often got some of the highest interest rates, with at DAI 6.27%, USDC is 8.49%. So actually, I've got quite a lot of money on Aave earning some interest rates. And what I think is really, really cool about Aave is that they've actually got something that's called a safety module, where people can actually stake their Aave in order to ensure the whole platform against DeFi hacks. So the safety module is pretty cool. It actually offers you a kind of backup and parachute should something go wrong. But they've been in the space a long time. I think they've got 5 security audits, and they always do security smart contract audits all the time. And you've got DYDX, that's a pretty awesome platform. That's for trading, derivative trading, but decentralized trading. You've got Fulcrum. And afterwards come a few that are more centralized, like BlockFi and Nexo. And these typically offer slightly higher rates for different coins, either stable coins or other coins. So Nexo actually offers quite high interest rates.
And
now the other ones I won't really look at too much because their interest rates are pretty low. There's one other platform we'll look at in a bit that isn't on this list. I think it's pretty interesting. Now, quickly, decentralized, centralized. If you're in the cryptocurrency space just for the money, it doesn't really matter too much. If you choose a centralized or decentralized option, you just have to realize that with a centralized option, someone can actually close your account for any reason, and you don't have control over your private keys. That's basically it. But if you're comfortable with putting your money on a platform that has control over your keys, then go for it. Doesn't really matter what kind of platform you use. I recommend using different platforms, maybe splitting up your funds between Compound, Aave, and maybe other ones like BlockFi and Nexo, so that you don't have a centralized risk. If you put all of your money onto one platform, then of course, if that platform just magically disappears, then all your money is gone. However, if you split it among 4 or 5 different platforms, then this risk is mitigated. What you can also do is split between the different stable coins. You can have a little bit in DAI and a little bit in USDC. The great thing about that is it will also help you have a higher interest rate, because often when the USDC interest rate is low, often the DAI interest rate is higher, and vice versa. Can you quickly open crypto.com, Jeroen?
Sure.
So crypto.com is a pretty awesome centralized platform that will allow you to get a lot of interest on your cryptocurrencies. And yeah, you can look at it. It's very user friendly, but you just have to be comfortable with using a centralized product. Now, what they've also got that is pretty awesome, they've got a card that you can use that will allow you to actually pay using crypto or using stable coins. So the thing that you have to realize with crypto.com is that the amount of earnings that you earn is also dependent on how much CRO tokens you own. So the more CRO tokens you buy, the higher earnings will be. You have to look at it in detail to see if it's worth your time or not, and also depending on the price of this CRO token.
Okay, yeah.
But it's, as a centralized option, it's definitely a good bang for your buck to earn interest rates, especially on other coins apart from stable coins, if you want to earn some interest on BTC or ETH. However, like I mentioned before, you have to be comfortable having a centralized platform holding your keys.
It's funny because normally, like if you would go to like maybe slightly some older generations and you would talk about a decentralized option, it would feel way more uncomfortable than the centralized option. But for the people who are in crypto already for some time, they feel more uncomfortable with the centralized option, which is actually quite funny, right? But this is actually looking quite good, because I think a lot of people here on the channel as well, they will like have quite some earnings end of this year in this bull market, and everybody going to ask themselves like what to do with it. And I think a lot of people, including me, I'm really thinking about going into real estate. I hear a lot of good stories about that. But yeah, if you look, for example, at real estate, you buy a certain property and you rent that property out, then you might get a certain percentage per year, which is not really that passive, right? There's some work and communication that has to be done. But if you have a look at these staking options, then it might even be a more profitable solution to store your stable coins. But what I think is quite interesting, because we have heard a lot about Compound, Aave, I think those ones are actually quite popular. Crypto.com is a very popular one, and we have BlockFi as well coming up. And when you, for example, like have a look at the decentralized versions and decentralized, and we have like decentralized, you create an account, you have these regulations, right? You are really storing your money at a certain company. And decentralized is you storing your money you're storing your stable coins at that certain protocol, right? Do I get that right?
Yeah, correct. And I think it's also about how much do you value your privacy? How much do you trust decentralized options to value your privacy? Because with many decentralized options, you can go in without KYC or any kind of bureaucracy. The only thing that you need is a Web3 wallet. You sign in and you can already start playing around with it. And if you're like the cool thing, for example, with Aave, it's already also running on a layer 2. It's also running on Matic with super low fees. So I recently made one video where I showed how you can actually use it. And I think you pay like less than a cent or something like that to actually use the different smart contracts. So layer 2 solutions are coming to Ethereum, and that's definitely going to make lending also a viable option for people with less money. But I mean, if for anyone that's like started maybe with 30,000-40,000 US dollars in the cryptocurrency space, even anytime last year, is probably are up maybe 8x or even 10x on their funds. So with $40,000, that means you already have somewhere around 400,000 US dollars in crypto. Now it's possible it goes even higher, and then let's say it goes up to 700 or 800,000, and then you decide, all right, I'm going to take 70% out or 80% out, and you've got like, let's for to keep it simple, let's say you've got 500,000 US dollars. I know that sounds like a massive amount of money, but for anyone that's in the cryptocurrency space already a while and actually took Shirun's advice and followed along. Yeah, he's probably already made massive amounts of cash, and with 500,000 US dollars, putting it into platforms like Aave, Yearn Finance, which we'll look at just in a bit, you can actually be earning somewhere around 8%, 10%, or even 15% per year. And then like at 10%, that's 50,000 US dollars that you'll be earning every year for doing nothing. And that money could actually be compounded, and that will be earning again next year, the year after that. And you can also use that money maybe to buy back into crypto during the bear market. But this wealth just stays there. It doesn't actually lose in value. We're not going to forget the inflation part with the stable coins. But yeah, that's pretty awesome. Now, there are risks with smart contract risks and stuff like that, but all that can actually be eliminated by buying smart contract insurance, which is not that expensive. You can actually buy smart contract insurance for around 2% per year. So if you're earning somewhere around 10 or 12% APY on one of these decentralized platforms, you can actually buy some smart contract insurance on Nexus Mutual. It's like a type of DeFi smart contract insurance provider. You can buy that smart contract insurance and you can sleep like peacefully at night without being scared that all your money disappears. But in my opinion, that's what I will be doing. I'll be cashing out, but I won't be going back into the through centralized banks. I might, of course, have to put a bit of money on my bank account so that I can pay for bills and stuff like that. But for the money that I actually don't want to use at the moment, I'm just going to be parking in those kind of DeFi platforms.
And which platform would be the platform that you say, okay, this is the one I trust the most, and this is the one I would definitely recommend to stake my stable coins?
So me personally, that's what I am doing, but I do have to put here in a small disclaimer. I am sponsored by Aave, but I was using the platform already before the sponsorship, because I actually reach out to them and say, I think this platform is really awesome, please sponsor me. So I actually put a lot of money onto Aave, and I also will be using Yearn.fi. If you go onto Yearn.fi, yeah, so Yearn.fi is basically a asset management platform that allows you to tap into yield farming basically with your stable coins, but many other cryptocurrencies. Me personally, I just use it for stable coins. And basically what it does is you lend or you put your stable coins in a pool like USDC. I'm actually using the USDC one. It's earning 15.93% per year. I've been using that for a bit. And the cool thing is that what they actually do is they try and find the platform that is earning the best possible yield, and it moves the funds from one platform to the other. And it also like tries to also find some platforms that offer some yield farming and then benefits, and then the tokens that get earned there, they get sold and USD gets bought back, and that USDC gets put into the pool. So that's how this growth is generated. So it's rather complicated strategies that are behind it. It's definitely a little bit more risky than Aave or compound finance, but that also explains why the like the percentage is higher. So you have to keep that in mind. The higher the percentage, higher the risk. However, also Yearn.fi can buy some smart contract insurance on Nexus Mutual. You can actually open up Nexus Mutual. I think this is a great resource to have, and it's important that people realize that you can actually make the DeFi space super, super secure by covering all risks. And Nexus Mutual.
Nexus.mutual.
I'm not sure what the URL, but ask your question first.
Nexus Mutual. Yeah, I was wondering, like, if you have like this dynamic number of the yearly growth, right? Like right here in Yearn, it's like almost 16%, right? On Aave, it's like 8.5%. Like, don't you think that in the end of the bull market, when we are going to see a lot of people taking profit, that this is going to be a lower percentage? Isn't that a risk too?
Well, basically, you have to see it like that. The reason why people are borrowing is because they actually want to go long. So during the bear market, what people would do is they'll probably still be borrowing, but since the price is falling, they're going to have to pay back. That means the borrower interest rate is actually going to go up.
And
if the borrower interest rate goes up, then the interest also goes up. So for example, I remember back in March 2020, when we had the flash crash, the interest on compound finance that I had at the time, I think it skyrocketed to 32%.
Wow.
So the more that the price goes down of the bear market, I believe, like from my experience, the lending rate's actually going to go up.
And then I think
because people will have to pay back the loans.
But if you have a look at the collateral, right? Like, let's say I want to take a loan on Aave. Let's say I want to take a loan on Aave, where other people like you who are lending can earn money on, right? So who is controlling that of what kind of collateral I have to put in to get a loan? What is the safety net for that?
So it's not the same for each platform. Some platforms is a bit higher. But all of these DeFi platforms, they've got something that's called over collateralization. That means you have to put way more money or way more cryptocurrencies onto the platform than you can borrow. So let's say if you put $100 US, you can only borrow $80. And if the value of the asset actually drops, maybe to $90 or $85, then you will get liquidated. That means the asset that you borrowed, the asset that you put onto the platform actually gets sold to cover the loan.
Wow. Okay, so that's actually quite.
That's why it's actually working so well.
Okay, yeah, that sounds good, man. Okay, so yeah, that raises a lot of that decreases a lot of risk, right? Because normally you have to check with the lender, how is their situation, can they afford to take the loan and stuff, right? But that is being eliminated. Well,
you can actually take it a lot further. There's a few people that they believe so much in the future of different cryptocurrencies that they actually put some crypto, lock it up, and actually got loans so large that they could buy real estate. So that's pretty crazy. And I think this is definitely the future. And probably the next steps are going to be under collateralized loans. That means being able to borrow more money than a deposit. But of course, that's going to be very difficult to ensure that people pay back the loan. But that's for another video. So Nexus Mutual is pretty awesome. It's the unfortunate thing is you have to actually get KYC for this, and that's because they have to make sure that people don't do fraudulent things, like they kind of claim too many smart contract failures. You have to prove that you actually lost money in a smart contract hack or bug and so on. But basically here you can actually click on get a quote to get protected, and you log in with your MetaMask. You say how much money you actually want to deposit on the specific DeFi platform. You're going to have to log in first before you actually see things. There's not much to see otherwise. And then afterwards, it calculates how much you will have to pay per year in order to insure against any losses. So in my opinion, I think like if you've got 500K or more on, or depending on how much you're willing to lose, you can already start thinking about opening a DeFi smart contract insurance. Yeah, if you're not too worried and you diversify among different lending platforms, then the risk is definitely a lot lower. So if you want to keep all of your money on one single platform, then I highly recommend that you get a smart contract insurance. But if you want to diversify and have 5 different DeFi lending platforms, then me personally, getting an insurance for all 5 of them, it's a bit of an overkill.
And you already diversify, so you.
But yeah, I mean, you have to be.
Right?
Yeah, so you have to be like comfortable with the risk. But like the platforms that we covered today, they've already actually been live for quite a long time, and they've got billions of dollars on it. So things can of course happen, but often when a smart contract failure happens, you have to see that these lending platforms, they are based on like 10 or 20 or 50 different smart contracts. And very often when there's a bug, it's only on one smart contract. So that doesn't mean that the whole platform sinks, but maybe only one pool. And that pool can hopefully be covered by the treasury, for example, for Aave, the safety model.
Okay. So yeah, that actually sounds quite interesting. Like if I have a look at these ones and I listen to your story, I also think that Aave is one of the more interesting ones, right? I would like myself prefer as well, like a decentralized place to stake. I think a centralized place like BlockFi, it has as well its advantages, but in general, I think it might bring even more disadvantages than advantages, especially in the world we are going into right now, right, where we have a lot of regulations and stuff going on, which is not really clear right now. So things can change in the future. So this definitely.
I think it also depends. I think it also depends where you're living, right? I'm not 100% sure if all users, also US users, can use platforms like BlockFi or Crypto.com. But it doesn't really matter where you are in the world. You can use DeFi platforms. You can be from North Korea, you could be from anywhere, as long as you got a phone, internet connection, and a little bit of ETH, you can actually take part in it. And I think that's the beauty behind this decentralized lifestyle.
Yes. Wow. Yeah. Wow. It's super impressive. Like it's really impressive, especially for a exit strategy once we are nearing the end of the bull market, right? Like this is definitely one of the options that I'm going to be looking at to go with my liquidity. And another question, like if you, for example, would stake at Aave, right? Let's say we have 500,000 USDC, want to stake it at Aave for 8.5% yearly. This is dynamic number, can change, right? But how does it work with how can you get that liquidity out? Do you have like a time lock that you have like every month you have this, or you can just take it out whenever you want?
You can take it out whenever you want. I've made a few videos showing exactly how you can provide liquidity. If you want, I'll send you the link.
Sure.
And it's
I'll
really
put them down below, guys.
Yeah, it's really awesome because on Aave, when you actually lock up some liquidity, you actually can see in real time your money increasing. So it's like constantly you see the amount, and if you put like, I don't know, 50K or 100K on Aave, you see like a few cents always increasing. Like, and that's really awesome. And
That
you
feels good.
have
That feels
no,
good.
yeah, it's really awesome. I was like, in one video, I was thinking, yeah, I should put that as a background for my computer, but then I thought, okay, maybe not. But seeing this money increase, it's really, really beautiful. It's really soothing, and you have no restrictions when you want to remove it. Yeah, that's basically it. You put it in, remove it when you want, and that's like this decentralized aspect of it. You don't have to ask for permission to use these platforms. Doesn't matter where you live, like what kind of religion or government you have in your country. You can use these platforms as long as you can buy some ETH. And if you're in maybe a country with lower income, I highly recommend to watch that one video where I show how to actually lend using the Matic layer 2, because there you can drastically save on gas fees. Because if you're using the Ethereum blockchain, you're going to have to pay a lot in gas fees. Then it only makes sense if you've got like higher amounts of money. But if you've got lower amounts of money and you still want to earn some passive income, then I highly recommend using it on Matic Polygon, which is this layer 2 solution for Ethereum blockchain.
Wow, that was a lot of information. Normally we are
That's
not
a lot of
talking so much
information.
about these options, right? So I think this is very interesting for all the viewers right here on the channel. But then it brings me to my last question, and that is like, do you have any DeFi projects? One DeFi project, might be multiple, which you are watching and what you're saying, like, okay, this is really a sleeping giant. This is one that this might outperform real good in the future, or you have any any suggestions on that? Any ideas?
Good, very good question. I mean, I've got one project I really, really love the idea behind it. At the moment, it hasn't performed that well in terms of price. And the only reason that it hasn't performed that well in terms of price is because there's still not that many users that are using the platform. And I think it's really, really awesome concept. And I'll quickly explain one scenario where it can be really awesome. Like, imagine you're like, maybe not a whale, but you want to buy 10 BTC, right? And then people are like, oh, is it a good time to buy right now? Is the price going to drop? Imagine you could actually buy 10 BTC, but then be protected against the downside. Like, the only risk that you have is losing 10%. Does that sound like something that's interesting? That means you have 10% risk, but unlimited upside.
Mm-hmm. So
That
how
sounds
does
like
that work? That sounds like a
how does
dream.
that work? That sounds really interesting, right? And the same is like with ETH, you buy, you're scared of buying the top. But what you can do is you can actually buy a type of insurance. And in other words, basically what you're buying is the type of put option, but it's formulated as an insurance. So you basically buying a type of insurance. It doesn't cost 10%. It actually costs less than that. But it's more recommended if you've got higher amounts of ETH or BTC, because you have to pay the smart contract fees. But then you can basically buy 10 ETH, 100 ETH, and the only risk that you've got is you might be losing this 7% premium if it goes up. And with BTC, it's the same. You basically, the only thing that you can lose is this 10% premium. Now, like I said, it's actually lower than that. So the platform that I'm talking about is called White Finance. So basically, this is based on the hedging platform. So it's on-chain options, but made super simple. So you're basically insuring against downside risk. So let's say you want to buy 10 BTC, but you're scared that you're buying the top, and then you can actually buy this 10 BTC and then protect it for a month. And should the price actually drop below your purchasing price, so let's say there's a 40% crash, you can actually remove afterwards your 10 BTC, but you can also collect the difference between the price where you actually entered the contract and the lower price later on. And I think this is super interesting concept. Now, why I think this is also really awesome for white holders is because for every time that someone opens one of these contracts, 33% of the revenue gets distributed to white stakers.
Okay.
So, and the really cool thing is that at the moment there will only be 8,888 tokens.
Okay.
That's one thing that's cool. So it's still pretty low cap. I think it's 25 million US dollars. Now, the only thing that you have to realize at the moment, it's not earning that much. It's actually really low, the revenue, because not many people know about the platform. But the cool thing is that the price at the moment is actually lower in terms of ETH valuation than the ICO price. I think at the moment it's at 1.1 ETH and the ICO price was 1.7 ETH. So it's definitely a lot lower, but I think it's got huge potential in the future, especially with the stuff that the developer is doing, because what the developer is also thinking about is creating some kind of collateral where you can actually lock up these protected ETH and then be able to maybe remove like 95% in DAI. You remember when we were talking about the lending where you have to be over collateralized?
Yeah.
If you actually put some assets in that cannot lose in value, but they can always go up, and then you can actually use that as collateral on a platform to then take money out to do something else. That's pretty revolutionary. So I think it's an interesting project. It's at the moment it's low key. Not many people are talking about it.
It's rank 803, bro. It's wow. It's very
It's
low
rank
key,
803. Yeah, it's low.
How did you come across this project? I've heard about it. I've seen it passing on Twitter a couple of times. I guess some people talking about it, but lately not. But some time ago it was a little bit.
I've actually been following the developer Molly Wintermuth, and I think she is doing fantastic stuff with Hedgic, and I really like the Hedgic platform. And I also really like the concept, right, of rewarding token holders by giving them a portion of the revenue. Now, I don't think this is going to be like something that tomorrow is going to make you a millionaire or something like that. But I think in the long run, it's an interesting concept that can give you a portion of the revenue. And like with one white heart, and if it starts gaining more volume with the revenue, so for example, Hedgic, I think it does like $6 million in revenue in a month. If you have one white heart token, that would be equivalent to around $1,000 passive income per month, something like that.
Wow. So if
but
this
of
is
course,
an ERC20 token, right? Like it's an ERC20.
This is an ERC20 token, yeah.
So if you hold this in your ERC20 wallet, it will be distributed to that wallet, or you need to get to a certain platform for that.
You have to actually use the white heart platform where you stake it. You actually lock it up on the platform in order to earn the revenue. Like I said, the revenue is still super low. This is something that you can kind of monitor and look at to see how it's developing. I think this is something that should be on your radar. Definitely not something to ape in, because you
don't bet
just
the farm on it.
I don't know what. don't just ape into it. I think you have to read about it. If you like the concept, I think for me it's a solid hold. I've got a few of those. I'm still in the negative, but I don't mind about that. I've got diamond hands because I really like the project. Yeah.
Awesome, Kierin. Well, Kierin, I want to thank you so much for today's knowledge you shared with us, because it's really awesome to hear this from you. You are really the expert in decentralized finance, so I really value your opinion in this. I think this is an interesting project, but I also think it's very interesting the options you've presented us in these staking platforms, which we can use if Bitcoin continues to grow and we are going towards the end of the bull market. This is going to be one of the options that I'm going to use to store my liquidity to earn a passive income. And guys, I want to tell everybody that for the ones that are not following Kierin yet on YouTube, make sure to follow him over on YouTube. I will drop the link of Kierin's YouTube channel down below in the description. It's very important if you want to be up to date with the DeFi movement in the DeFi space. Kierin, I want to thank you so much for joining us in today's episode.
Yeah, thanks a lot for having me on the show. Really awesome. And guys, don't forget, smash that like button.
Don't forget to subscribe, guys, and I will see every single one of you in the next video.